In this video, we are going to discuss the most frequent asked questions on Google on cryptocurrencies. So I'm going to try to answer these one at a time throughout this video, and to my help today, I have my iPad. So let's dig into it, I think. So the first question that comes up a lot, this is the most Googled question on Google when it comes to cryptocurrencies. What is a cryptocurrency? Well, that is a tough question to answer, of course. Now, a cryptocurrency is really a new type of currency, and there's many variations of this. A cryptocurrency in its essence is divided into a few different areas. So basically, you have startups. Do you remember back in the 90s when we had internet startups, Google, Amazon, etc.? And some of them were started a bit later. Well, this is the next step. This is the next step in the evolution. So what happened was now they're using a new system. So the cryptocurrency is using the blockchain. Now, blockchain, you can just look at for simplicity as Internet 2.0. Everything that happens on the internet faster, better, and with a lot more speed. The blockchain is a ledger. So, you know, the bookkeeping with debit and credit, it tracks data. So a giant ledger that tracks data. So it's just a more efficient way. So using the blockchain can also be public, so everyone can see it, which makes it really transparent. Look at it this way. If you're scanning, for example, a steak in the supermarket, you can actually see if you scan it, and then if it is on the blockchain, you can then track it back to where it was originated from. So a cryptocurrency is then the token that would then be that transfer. So when it gets packed, there's transactions happening along the way. So when the meat gets from the farmer to the store, it gets packed, there's transactions happening. And then you can allocate a cryptocurrency or a token, which is called, to that piece of meat, which then you can track the entire way. And the other way of looking at this is Bitcoin. That's the biggest cryptocurrency in the world. Now, Bitcoin is just focused on transactions. So it's just a monetary value, and the more people that use it, the more it goes up. But if you look at the cryptocurrency or the crypto Bitcoin, then what will happen is you would see this. You have the database I spoke about, and the transaction data that are filled are just monetary value. So the reason it has value is because there's ever only going to be 21 million Bitcoin created. It's programmed money. It's digital money. So some people say it's digital gold even. So what happens is that if you then transfer money over, then you can use those on a debit credit card, and you can even pay for stuff with it, or you can keep it like you would keep gold in your house to grow in value. So the thing is, because there only are a limited amount, it creates scarcity, something that the money we have today does not have. Because they're printing endless amounts of money, which makes it sure that inflation happens and they lose value over time. With cryptos and Bitcoin, that should not be the case, which is why Bitcoin has been the absolutely most and best growing asset since its inception in the 2009. So it actually grew from a few cents up to $68,000, which is awesome. So really a takeaway, what is cryptocurrency, crypto? It's really a new form of money. It's a new way where we can create trust among companies, and it is programmed money that you can actually be using on a regular basis now as well. Great, then, this is awesome. But how do I invest into cryptocurrencies? That's a great question as well. It is actually as simple today as buying a stock. You can buy two different variations. Number one, you can buy a tracker. So you can go into websites such as eToro, they might have the real thing, or Revolut even. And you can then invest into cryptocurrencies via the Revolut app. So that's a tracker. It tracks the price, but you don't own the underlying asset. So if Bitcoin, one of those 21 million as example. Or you can actually open an account on a crypto exchange. And I would urge you to only use the biggest ones like Binance, Coinbase. Just Google what is the biggest crypto account in your country or crypto exchange. And then you open an account, you transfer some money over, and then you buy it the same way as you would buy a stock or a share. When you get your money onto the account, all you need to do is then, like you do with currencies, you exchange one currency for the others. You would exchange pound, dollars to euros if you're traveling. You do the same thing here. You exchange your pounds for Bitcoin, Ethereum, or any other cryptocurrency, and then you own the cryptocurrency, which then hopefully rise in value versus the pound or dollars, exactly like the stocks or shares would do of Amazon, Tesla, etc. What is crypto mining? Let me just take it back one step. So when we have, the reason we have something even called mining is because the cryptocurrencies are decentralized. And I know that's something that is debatable, but just bear with me for a moment. And in order for us to understand decentralized, we need to take it back to what is centralized. So the banks, as an example, are centralized. So they control all the money that is being sent back and forth between countries, etc., etc. So they have full control of how much money they're being transferred. That's what banks are doing. And they're the only party. So if the bank were to close down, what would happen is that, well, then you can't withdraw your money. They can actually choose. So it actually is a one-point failure system. If you go over to decentralized, it means you don't have one central point of control. And in order for us to make sure that it can be decentralized, we use something called miners. Now, a miner, you can say that this is a computer. Let's call it a computer game. So you download the game of Bitcoin or all the previous Bitcoin transactions. And there's thousands of computers around the world that mine for Bitcoin. So when you're supporting the network and helping the networks, you buy one of those machines, it downloads the software, and then imagine you play a game, you need to solve different things, and you go up to the next level if you manage to solve it. It works in a similar way. So the Bitcoin miner or the machine, the data, the computer, it solves complex puzzles. When it's done solving it, it gets paid and it verifies a transaction. It gets paid in Bitcoin. So you basically get paid for playing a computer game. That is what the miner's role is. And there's different variations of this, but the miners make sure it stays decentralized. How? Because when a transaction is made, the transaction is sent to the thousands of computers all around the world. What happens then is that they all agree that this transaction has happened, the job that the bank would do by itself. And if more than 51% agrees that this transaction has happened, then the transaction goes through, and that takes around 10 minutes to do so. That's when it gets verified. So that is really what crypto mining is, and I hope that makes sense for you as well. So it's a little bit like mining gold. If you find gold, if you verify the transaction, then you get paid. You get gold, or Bitcoin in this sense. How do you buy cryptocurrencies? And I think that's really similar to invest in it. So it's really the same way as you buy or invest into a share or a stock. So when you invest into, and what I would say is different, if you buy into a crypto or a stock, you just buy into it. Just buy whatever the price is. When you invest, then you maybe have a strategy attached to it as well. But it's really the same thing. You open up a exchange in Binance or Coinbase, and what you do next is that you transfer your money over through a bank transfer, and then you convert your pound, euro, dollars, or whatever you have to the cryptocurrency of your choice, like Bitcoin. And then, as soon as you made a profit, if it goes up in value versus the other currency, you then can exchange it back to euros, pound, dollars, and take it back to your bank account if you want. Or you can use a card. Many of the exchanges have one nowadays. So you can use Binance. They have a Visa card or MasterCard. And you can then pay for your food with cryptos as well. So why is cryptos crashing? Great question. And I mean, I wish I knew have the answer to all of this. But basically what happens is that the reason cryptos are crashing is because everything moves in cycles. That's one reason. So we see these big bull cycles and bear market cycles. And we do see it in cryptos, we see it in stocks. So what basically happens is that cryptos goes up. When they go up, they go up way too much. So it went from $3,000 up to $67,000. And then it went all the way down, well, depending when you're watching this, to $16,000. In the last cycle, it went up to $20,000 and then down to $3,000. And during that time when it goes down, it's driven a lot by manipulation, by speculation. So if the more people that panic and sell, the further down it goes. But more so, there might be these black swan events. We have the FTX happening. It crashed the market when one of the biggest exchanges just were a scam or a fraud. And then the other part of this is also Luna. Luna was one of the biggest cryptocurrencies in the world, also proved to be a scam. So in a new market, there will be a lot of these things happening that really spurs the market to either go up or down. So in the longer term, it's really going up. And in the shorter term, which is a year, 2 years, 3 years, then yeah, we might have these cycles of upward moves and downward moves. But usually events triggers massive falls in the market. For example, Corona happened, triggered a fall in the market. A recession happened in the stock market in the world that triggered a big downfall in cryptos as well. And how does cryptocurrency work? And I think we covered this one already. They are actually on the blockchain. And when a transaction happens, so for example, let's say you have Bitcoin. You have one Bitcoin in your wallet, and then you want to send this Bitcoin across the world. So what happens is you then send, like with the account details, you get my account details, you send one Bitcoin to me, and then that transaction gets sent out to all the miners. They verify the transaction. If 51% agrees that you actually had one Bitcoin in your wallet and you sent it to me, the transaction is verified and I get the money. Very similar to how it works when you have a bank as well. Next question is, why is crypto down? The cryptos are down in the short term or up in the short term because of shorter term speculation. When someone goes in and buys a lot, it just goes up, and when they sell, it goes down. In the shorter term, it's pure speculation of traders that really buy and sell on a regular basis. That will drive the market up and down in the shorter term. Then big news events, like we discussed before, will do it in the longer term. How to create a cryptocurrency. The first cryptocurrency, Bitcoin, was created by someone called Satoshi Nakamoto. Now, no one knows who it is. Someone claims to know it, but it hasn't been made public. So it could be a group, could be a person, could be a community. We don't know who created that, but it's open source. So what happens is, and what open source means is you can actually go to GitHub is the place. You can grab the code and you can create your own Bitcoin. I actually have a friend, and this is what he did. So he copied the code of Bitcoin, and then he had this cryptocurrency with his girlfriend. He said that when he cooked food and when he made dishes, they got tokens, and they can use the tokens for massage and other things, I suppose. So then they had created their own ecosystem for it. So basically you can see it as a video game. For example, when you play a video game, that's one way of looking at it. Then you can get, for example, coins, you get fake gold, you can buy things within the game. Very similar, you can use the crypto for. Or what someone has done is they can create a cryptocurrency like Starbucks has done. They're working out to create a cryptocurrency like a loyalty card. So instead of carrying this card on your phone, you actually get NFTs. So they gamify the whole thing. So since it's open source and since it's a public blockchain, you can actually go and see, and it's a lot easier to transfer, and it's a lot more gamified. So basically it's building games in a more simplistic way. Or, like with Bitcoin's case, it's more you can create a blockchain that actually has a value if enough people adopt it. And then you can pay for it as well. And how do you trade cryptocurrencies? You actually trade it the same way as you would do with regular currencies. What does that mean? Well, what that means is that if you want to go to Hawaii, well, then you need dollars maybe. So you will then transfer or exchange your pound to dollars. And for that, there's an exchange rate. So 1 pound might be worth $1, or 1 pound might be worth $10 one time, or $0.6. So the currencies goes up and down in value. And the same is true for cryptocurrencies or even stocks and shares. So depending on how well the company do, the company goes up in value and you make money. You get more dollar back after you've invested. And the same is true here. So when you trade a crypto for dollars or even with each other, if one gains value, then you make money. If it loses value, you lose money. So it's really the same way as when you invest. The only difference between trading and investing is that trading is more frequent. So you buy and sell a lot more often than you do with investing. So, but it works the same way. So basically investing is from months to years, and trading can be within a day or really from days to weeks. So it can be a lot shorter time frame. So that is really what defines trading and investing. And if you are trading cryptos, make sure you always trade with a stop loss. Never trade without a stop loss. Very important. So I hope you found some value in this, and now you know a little bit more what a cryptocurrency and the blockchain actually is. So let us know if you have any questions, and also comment below. And let me know which part of this that you learned. So is there anything new you learned about this? We'd love to hear that as well, so we can support you. And with that being said, look forward to seeing you in the next video.